Okay, welcome everyone. In this video, I'm going to cover some stock market technical analysis, really highlighting how we closed the week. So we'll look at some weekly charts across the indices. Maybe we'll poke around and look at a couple individual stock and trade ideas, and then we'll wrap up. So let's get into it. Give me a thumbs up if you guys are new. I hope you do find value in the content, and I do try to point out trade ideas when I see them. So here we go. We're going to start out here today with the DXY, which is the dollar index. So again, I pointed out that I think that a lot of the market rally really in 2020 and the beginning of 2021 has been based on dollar weakness. So it begs to, we can argue that if we get dollar strength, we should see stock market weakness. And we are starting to see some dollar strength. So here's the pattern that we got. We got this descending trend line right here. You can see lots of reactions along the hourly chart there. If I flip over to the daily, you can see it's a little cleaner of a chart. And we had a breakout. So there's your breakout, a trend reversal. That trend reversal was forecasted in advance on this channel, of course, and also in the chart because of bullish divergence. So you can see, even if I get rid of this longer term divergence right here, you can see right here, clear bullish divergence where we started to move up in momentum while price was continuing lower. So it was forecast, the trend reversal was forecasted in the momentum indicators, but it didn't show up in price. That's what creates the divergence. Price is diverging from momentum. Then price snapped back and had a breakout to the upside. So we have dollar, we have the dollar rising, and you can see here how we closed the day on Friday was with, pretty strong bullish day for the dollar, closing at, kind of a new high for this little breakout pattern here. Looking at the hourly again, you can see we drifted above that former high right here, which was set on January 11th. We even got a reaction right here. You can see we came up, tagged that twice, got rejected, but then it stopped and broke higher. So that's a breakout of that former high. To me, that says that we're likely to see the dollar go higher. The dollar will start trading Sunday night, and the market's closed on Monday due to Martin Luther King Jr. Day. So the dollar is going to be trading on Monday, and really we'll have to find out what happens on Tuesday. If the dollar continues to drift higher, which is what I think is going to happen, I think we'll probably get up to this area, all the way up here at about 91.09 or so, 91.10. That's we had a lot of reactions back here. I think we'll wake up to the dollar on Tuesday being up there, and the market is likely going to gap down. The stock market is likely to gap down. So again, dollar strength, if we continue to see more dollar strength, we should continue to see stock market weakness. I really think that correlation is intact. Flipping to the inverse of the dollar, which is gold, you can see here, gold's still hanging out in, still holding support. So gold, if I go to the daily chart here, we've got this downward trend line that gold's been in really since August. And we hit major support right there at, basic, went all the way down to 1766, but I had 1790 as kind of my key level. A little bit of an overshoot. Broke out to the upside of this downward channel, and we're still continuing to back test. So as of right now, we're still sitting right on support. Doesn't mean it can't break down. Doesn't mean it can't hold. I'm a little confused on gold, to be honest. So it is at support. It is an area you could be buying it at. I just don't like the fact that it looks like the dollar wants to break higher. And if the dollar breaks higher, I would think that gold will break down. So I'm watching for that. And we just have to continue to see what the charts do. Before I get off of it, I want to go back to the dollar real quick and look at the weekly chart. And this is the weekly chart right here. So it just gives kind of a cleaner picture of the breakout. You can see we had several weeks of down dollar really since, I mean, the dollar's been falling since the Fed came out and did their money pumping, basically. But you can see we're getting kind of a counter trend move. And that's a clean, crisp weekly breakout. So I'm looking for more upside in the dollar. Okay, let's look at the long bond. We'll start out here with the weekly just to kind of give a good eye picture. So the weekly doesn't tell me anything on the long bond. We have a downtrend, obviously, on the long bond. And on the weekly, that downtrend remains intact. So nothing's really changed there. We don't have any weekly bullish divergence or anything like that. Let's look at the daily. So again, the daily, still a downtrend in the long bond and no bullish divergence in the on the daily either. So to get bullish divergence, we need to see a slightly lower price below this, basically below, ideally below this 150.75 and potentially below this 150 for that to show up. So look for that, and unless we have that bullish divergence, then this is still in a downtrend, and I don't see any signs as of right now that the long bond is going to rally anytime soon. If I look at the hourly, we do have bullish divergence here on the hourly, which is right here. There's your bullish divergence. As price continued lower, right there, the momentum was moving higher, signaling a trend change was likely. And then you have this kind of small trend line right about there. So the hourlies usually don't play out for as big of a move. And we had a break to the upside. So that might be it for this hourly chart. Again, if you want to see a more sustained move, you usually want to see the divergences show up on the larger time frames like the daily. As of right now, still a downtrend. And I'm looking for bullish divergence to show up and then for bonds to rally, but they're not there yet. Let's look at volatility, UVXY, or you can also use VXX. And volatility has nice, clean, bullish divergence on the daily. See it right there, daily divergence, where momentum on the RSI continues to move higher. Also on the PPO, right there. And price had kind of continues to dip to make slightly new marginal lows. So there's a divergent low right there. This was another divergent low. Each one of those divergent lows as of right now has proved to be a buying opportunity. So this to me looks like consolidation or accumulation, basically, where where people are accumulating long volatility positions. What this is signaling is we're likely to see a trend change or some sort of a breakout. And that's what I'm positioning for as well. So I'm looking for the market to kind of break down. I'm looking for volatility to spike up. And that's what's showing up in the charts as of right now. So we just continue to kind of hold this support area around $10.35. When I look at the weekly charts on the major indices, here's triple Qs. Tech sector, I don't see anything super impulsive. I'm not seeing a big weekly breakdown. So again, that might come next week. We don't know. But it's just not showing up on the weekly. Now, the weekly is a larger time frame. By the time the weekly shows up and shows a big breakdown, usually some big moves have already happened. So the daily, I think, is a little tighter of a time frame to use for swing trading. And we do have breakdowns of this kind of moderate trend line right here. It's not my favorite trend line. I'm going to actually take it away because there just wasn't enough reactions for me to really. I just marked it out. Here's the trend line that I really like, which is this bearish rising wedge pattern, where we had coming off the November area, lots of reactions. We had a breakdown right there, a daily breakdown. We had a daily back test right there, and now we're continuing lower. So I'm looking for the trend to be set. We need to see lower lows. We have lower highs, which was right here, and we need lower lows. So a break below this 3.0, it's about, we could probably say a daily close below 306.89, but preferably a daily close below the low right here, which is about 305.26. A daily close below that, I think, is going to set the trend and set us up for possibly a good swing, a good swing trend sell off. So we'll be watching for that. SPY here. you can see obviously negative divergence continues to build, and we had a breakdown of this upward price channel. So here's your upward price channel right here on the daily chart, and we had, again, if you see the daily, we had a breakdown here, holiday breakdown, a breakdown here that was a bear trap, and we have another breakdown right here. Is this another bear trap? Well, time will only tell, but it is a breakdown as of right now. Look for further downward price action to confirm. Small caps, IWM. So again, on this one, here was your breakdown of this trend line going back to November. Here's your uptrend line right there. Your breakdown was really right there. So you have two breakdown candles. And then we did a back test, a series of back tests where it continued to just kind of grind higher each and every day. And then, you know, on Friday, we had a kind of an impulsive rejection off of that, closing down here. Although this is kind of an indecisive candle, where it closes right in the middle. This is an indecision candle. So we don't quite know, you know, we don't know if it wants to go higher or break lower. I'd look for the next candle to help confirm. Okay, the weekly chart on XLF, you can see this is how we close the week. This is a doji candle. It's not an extreme doji. The longer the tail, usually the better, but it is a doji candle, a potential reversal. Look for the next candle to help confirm if this is going to prove to be a top or you know, at least a short-term top. So that's on the weekly chart. If we go to the daily here on XLF, you'll see we don't have any negative divergence. So I marked this out right here, but there's no negative divergence. It's just bullish momentum. So we're not exactly sure what XLF wants to do. If it wants to, you know, make a new high and then put in a negative divergence, maybe it'll do that. But we just don't have it there on the RSI. We do have negative divergence showing up right there on the PPO. You can see that that is negative divergence there. We just don't have it on the RSI. So usually you want to see it on both. You don't have to have it on both. And actually you don't really even have to have it at all for a sell-off to take place. It's just a indicator that tells you that something's likely. So that is that. Now, I would want to see a breakdown of this level, 3060. That comes back from this gap all the way back here when we had the COVID drop. You had a gap right there. So a break below that, an impulsive breakdown, and I think we go lower. And then ultimately, you'd want to see a break of this level right here, which is about 29. That is going to be your kind of your bull market uptrend line going all the way back to 2011. So that's your main trend line right there. This is your bull market in XLF. Broke trend here, back test, and then they did a back test, and then it's recovered. Looks like a breakout, but if this fails, then and we break back below, that's a false breakout, and that likely will set up for much lower prices over kind of the longer term. So watch for that breakdown if it takes place. Otherwise, this should hold as support, this trend line right there. Here's another look at tech, XLK. So this is technology stocks, and except it doesn't have Amazon in it. So it's Microsoft and Apple and other tech stocks, but no Amazon. And you can see a little bit of a different look here in tech. We had an uptrend line right here, and we're getting a pretty impulsive. That's a pretty impulsive breakdown on the daily chart. Two solid breakdown candle red days. So tech looks like it wants to go lower, and so I'm positioned for that. I think tech does head lower. Whether we get a bounce here or not, I don't know. But to me, it looks like tech is going to work its way lower over time. Looking at the divergences, there is negative momentum, and we just trying to see if we actually had any divergent action. Not really. This was kind of a divergent high. It made an equal high to this candle right here on lower momentum. Not the cleanest divergence. However, that's just on the short time frame. If you scroll out a little bit, you can see we clearly have negative divergence kind of farther out. This price action all right here is all divergent high compared to this last former high. So higher highs on lower momentum is negative divergence, and that is signaling a trend change is likely. We also have it on the PPO here. Sorry about that. My kid needed me to change some batteries in something. Okay, so we have negative divergence across both momentum indicators, and we have, what looks to be like a sell signal right there. That is a sell signal. That is a breakdown, and it's intact. So I think we're heading lower. W here, you can see that W basically put in a divergent high right there. That's a big reversal candle as well. But this big spike, it was all the way up here, made a new high, a new all-time high, and it was a divergent high. And that divergent high was faded into. So oftentimes divergent highs get sold into. So watch for them. And then the following day, more selling. So down 9% basically on Friday from the high, from that divergent high to where we're at now. And this thing's a real mover. That's 20% in basically 2 days. So if you bought that breakout to an all-time new high, that's a 20% drop in just 2 days. So looking for this thing. Obviously, I'm looking for it to go lower, but we've got, for a swing trade, we got some more major support, which falls right about there, which is right about 226.80. I'd want to see a break of that to start to set this up for a much larger move to the downside. We break that, and I think we're heading down to this first next level of support, which is about 135.26. And from where we're at now, really from the high down to there would be about a 60% drop. So I think that's in the cards in the near future. All right, let's look at oil. Let's look at the weekly chart here on XLE. All right, so look, not necessarily a reversal candle here on the weekly, but a clear rejection at least up at this 44.70 area. Again, this was the area I kept pointing out. That's why I've got the lines of resistance drawn here where I thought we were going to reject. And so far we have. Looking at the daily here on XLE, you can see right up there, that was the area of this island cluster reversal top right there that I said was likely to be the area we'd reject at. About 44.81 is where I marked out. That came from this former breakdown candle right here. You can see that big breakdown candle. That looked like good resistance, and you can see where we traded up to. We just went up to 43.02, so about 20 cents off, and then rejected from there and have headed lower since. So I think XLE it's likely energy is going to start to sell off some more, and I think we're coming down to this 34 area. Probably hold support down there. Negative divergence again on the RSI and on the PPO right there. So as my chart gets away from me, there we go. The negative divergence is right there. So you've got it across both indicators. Again, last time, we had bullish divergence back here. This was the bullish divergence, and let me point that out. Right there, this is where I was talking about going long. Right in here, we had this bullish falling wedge pattern, bullish divergence. We had the breakout, and that's where I went long, was right, basically down in here. And, from there, a rise, really from the highs, a 50% rise. But now I think we've got the opposite. We've got negative divergence. So now I'm thinking we're coming down to this level. And XOM, you can see here's your island cluster reversal top area. We trade it. We just spiked right into the middle of it right there, and we've rejected since. So it doesn't mean it can't continue to go higher. I'm just expecting this area, really where we just rejected, to hold as kind of the near-term high. And what I'm looking for in XOM is at least to come down to this 41 area. I think that's a pretty, that's some good support down there. So I think we're going to come down. That's a drop from where we're at now of about 15%, 14.5%. All right, First Solar. This one actually looks like it had a sell signal. Looks more like the real deal than we've had in the past. Here's what I want to point out on the daily chart. So here's your uptrend line coming off the March 2020 lows. Ripping uptrend right there. It's had several bear traps or false breakdowns. Breakdown here, bear trap. There was another bear trap. There's another one, and that one actually was a bear trap as well. But here's how we closed on Friday. That breakdown candle that's a pretty impulsive breakdown candle. It's larger than this former breakdown candle, and really that larger than obviously these. So that's a pretty impulsive one. Look for a little additional selling maybe to help confirm, but to me this looks more believable, like the real deal breakdown than these past ones. So it's just something to keep an eye on. We did have negative divergence. We've had that pretty much, for a while. Looking at the other solar stocks, you can see there's, sustained weakness all last week on run was selling. They sold this thing, pretty much all last week. So that's down from that peak all the way here of about 16, 17% just last week. So this looks like a back test of the broken trendline support. Here's coming off the March 2020 lows. Broke support right here, did one full back test, kind of another partial back test, another big partial back test, and they're selling. So doesn't mean they can't continue to back test. It's hard to say. There's no way to know if it's that. But as of right now, we're below resistance and heading lower. And some of these other solar stocks were weak too. Let's look at Tesla. This is the king of the solar stocks from my perspective. It's the one that really got the solar trade running. So I think, Tesla had such a huge move up. Everyone else was jumping into other solar stocks thinking they were going to get the same kind of move. It's the same thing that you see in like altcoins when Bitcoin rips and things like that. People they look for the next, they look for the next Tesla basically. And so they jump into the other solar stocks. And that's why all the solar automakers just were like, getting stupid basically. Here's Tesla. Nothing impulsive yet. So we saw a little bit of selling on Friday, down 2%, but that's nothing. All right. We're not looking, that's not the sign that's telling us Tesla's going to make a big sustained move to the downside. So the first up, we have, here's your uptrend line off the March 2020 lows. This is the huge rip higher. Broke trend here. We haven't really done a full back test. We've just been trading in this secondary trend. It just created another trend line. So first things first, break of trend with a nice impulsive breakdown would be a sell signal. We get that, we start to look for lower prices. Until we see that, this thing obviously can go higher. And here's Citi. You can see obviously Citi, they were, was going against us. I'm short Citi, full disclosure. But Friday, had a pretty impulsive sell down. Nothing technically has been broken, no technical damage to this uptrend. So it's still in a technical uptrend, but looks like we have the makings of an island cluster top. So we need to see a gap down. We get that gap down on Tuesday. Let's say we gap down to this 61.78 area. And it holds as a gap. Maybe we gap and sell off basically. Then this is your island cluster top reversal pattern. That signals that this was a top. Citi, I had the blue line was my stop loss line, so I'm still looking to stop out above. It's about 70.86, 70.90, somewhere right in there. And then, but we haven't hit that stop yet, and we're still holding at major resistance, which is at 68.61. So again, I'm still looking for that gap down. I think that's what's going to show up here, and then they'll impulsively start to sell off. And this will signal that this was a near-term top. And again, I got short right in this area, right around 62. So this thing's not that far away from my entry. I'm only down about 4%, we'll call it. Completely within the parameters of risk. And that's why it's important to get, take positions near risk levels, supports and resistance, so that if it goes against you, pretty early that you're wrong and you can get out with a small loss. And if it goes in your favor, you have a high profit potential. Okay, well, that's really all I got. I've kind of flipped through the charts looking for anything that's really interesting. Wanted to point out everything that I saw as of Friday. There's lots of potential setups that are really close to triggering, and I've pointed them out in the past. They're not there. Digital Turbine. There's all kinds of stocks that are in uptrends, but they're setting up for breaks of those trends. So I'll start to focus on those if we get closer to breaking, and then obviously if we start to get triggers or sell signals or entries, I'll point those out in future videos. So I do appreciate it. Again, if you guys want to learn how to use technical analysis to your advantage, take my course. Link is in the description below, and drop me a thumbs up before you guys check out. I do appreciate that. See you guys on Tuesday. Markets closed on Monday, so take care. Have a good weekend.